Welcome back to Candlestick College, and we are in day 2 of week 1, so hopefully everyone's in the right spot, and we're just going to get right into it today. So here's where we are in the course overview. We're in day 2 right now, and if we just zoom in right here on chart basics, we're going to see that we completed sources day 1. We talked about stockcharts.com and finviz.com, and hopefully that homework assignment wasn't too hard for you. And now today we're going to talk a little bit about info and the info available to us all in these sources here. So here is the overview of what we're going to talk about today. And the key pieces of info that I want to highlight are these 3 pieces right here. So the Bollinger Bands, the moving averages, and then the average true range. It's called the ATR. And these are all important indicators and overlays that we can put on the charts. But also, I'm just going to briefly explain what they are and what they mean and what we can derive from this information, okay? So the Bollinger Bands are just bands that are 2 standard deviations away from a mean, okay? And the Bollinger Bands capture 89% of the price movement, okay? So the moving averages, they more show the consistency of the price movements over time, okay? So the moving averages, I'm going to show them on a chart in a second, and it's going to be a lot more clear when I show them on a chart. But the moving averages, depending on what type of moving average it is just an average of the close prices over the last however many periods. So if it's a 200 period moving average, it's going to be the average close price over the last 200 periods. And then if it's a 50, then it'll be over the last 50 periods, okay? So, and then the average true range is just an average value that a stock is expected to move in the following days based on the 14 previous historical days, okay? And these are really the only information that I use, that I overlay on the charts. I don't bother with MACD. Maybe you've heard traders talk about these terms, RSI, ADX, VWAP, okay? The moving average compounded daily. Sure, that may be useful to hedge fund managers or mutual fund managers, but I've found that it's not really all that applicable to trying to make money in the markets off of your own money. So we're just going to ignore everything else besides these 3 things right here. I'm going to go in depth today about each of them. So the first is the Bollinger Bands. And to see these Bollinger Bands, we're going to go to stockcharts.com. And we're just going to type in SPX to pull up the S&P 500. And you can see on this chart, there's no Bollinger Bands on here, but you can see the blue line and the red line. And if you look up here in the corner, you can see that the blue line is actually the 50-day moving average. It's going to be the 50-day moving average because this is the daily chart, okay? If you zoomed in closer, then you might see a different 50-period moving average. And it's because it's on the close price of each period and not the close price of each day. So it's important to grasp that concept as well. And then the red line is the 200 period moving average. And in this case, it's the day as well. So this line is the average price of the last 200 periods, okay? So this line doesn't fluctuate as much because every day it's just forgetting the day from 201 days ago and introducing one new number, okay? So everything is only changing 0.5%, right? Because 1 over 200, it's changing at most 0.5%. And you got to think the new information coming in is replacing the old information from 201 days ago. So you have to compare that. And if it's very similar, then the number is going to be very similar, okay? So once we add the Bollinger Bands on the chart, we're going to scroll down on stockcharts.com and we're going to see these overlays and indicators. And this is where we're going to add the Bollinger Bands and the ATR. And you're going to see the Bollinger Bands option as an overlay. So once you scroll down, you're going to see these. You're going to see the chart attributes first, and then you're going to see the overlays. And this is where we input the Bollinger Bands. And if we just drop down Bollinger Bands, the default parameters that come up are 20 and 2. Okay, so the 20 is the moving average that we're using. It's the 20 period moving average. And then the 2 is the 2 standard deviations away, which captures 89% of the price movement. Okay, so the indicators, we're just going to add this one indicator, ATR, and the parameter here is 14 because it goes off of the range, the price range over the last 14 days. So it takes the average of the price range, the high and the low, over the last 14 days, and it gives you a number. And that number is just the average price of the last range over the last 14 days. So that gives you an idea of an expected range to see in the future. And if we just add these two things, this overlay, this Bollinger Bands overlay, and this ATR indicator. So let's look at the chart here. So I added the Bollinger Bands to a standard stock chart, and you can see these green lines are the Bollinger Bands, and the dotted line is the 20 period moving average. Because of the daily chart, it's the 20-day moving average, and it's the average close price over the last 20 days, okay? And that's why it's changing, is because every new day gets new information and it forgets 21 days ago. And similarly, the 50 period and the 200 period operate the exact same way. It's the average of the close prices on it. But before I show that chart, I just want to explain how the Bollinger Bands work for those of you that haven't had statistics in high school or college. I'm just going to explain this briefly so you know where it's coming from. So this is a normal curve, and under a normal curve there's a certain distribution and there's certain probabilities that go with being a certain distance away from the average. So here 0 is the average, and then one standard deviation away in either direction would account for 68.2% of all of the data that is compiled. And then if you were to go 2 standard deviations away, that's going to capture almost 90% of the movement, okay? So if you think about on a chart, what this means is, think about this average as being the 20 period moving average. And then the Bollinger Band lines are going to be 2 standard deviations away, okay? But these prices, these close prices, are constantly fluctuating, and old numbers are being replaced by new numbers, right? Every day there's a new number coming in for an old number. So it's important to realize that these lines aren't going to be straight, okay? They're going to vary, and it's going to be based on the standard deviations and the average price at the time, okay? And the ATR is going to show as an indicator at the bottom of your chart, and you can see how the ATR has changed over time, right? So in this area of steep decline, the ATR was at a high. It was rising because as the range increases, so does the ATR, because the ATR is the average range over the last 14 days. So that's important to realize as well, and this can be a good number just to refer back to when you're looking at the market. So that brings us to homework number 2. I know this day was a little longer than day 1, but this is a lengthier day. So here is the homework. So step number 1, you're just going to go to stockcharts.com, and you already have that bookmarked, right? So step number 2 is add the Bollinger Bands to the chart and add the ATR as an indicator. So the Bollinger Bands are the overlay, remember, and the ATR is an indicator. So next, you're just going to want to speculate a specific date that the SPX, that the S&P 500, is going to hit one of the Bollinger Bands. And hopefully it's a day where it's not already touching one. But if it is, just still guess when it's going to hit one, because tomorrow it might be already back to the moving averages, right? Okay, so you're going to want to write down today's date. It's really important. You're going to want to date it. And then you're going to write the range of the Bollinger Bands. Okay, so when you pull up the Bollinger Bands on the chart, it should be in green at the top. You should see an upper and a lower number for the Bollinger Bands. And then you're just going to want to write down the current close price. And lastly, and this is where it gets really fun, is you want to specify a date that it's going to hit the upper or the lower Bollinger Band. And this is just all speculation. This is just a guess, okay? And you're going to track this and see if you were right and how close you were or how far you were. And this is where it gets fun. So definitely want to invest in a record book if you didn't already, to keep track of all this information. But I did do the homework as an example, just to give you. This chart was from a while ago, but it was 3 May, and the Bollinger Band range for the S&P 500 was 2875 to 2955. So that was step number 2. And then step number 3 was to write down the current close price, which was 2932. And then I guessed that it would take 2 days to hit the upper Bollinger Band, because I thought it was in an uptrend. So I was just a random speculative guess. And I mean, I don't know if I was right or not, but I guess I can go back and look. I don't think I was right. But for you, doesn't matter. You're going to do this with a fresh start and make some fresh speculations. So I wish you all good luck with this homework assignment, and I will see everyone in day 3. See you then.